Well, as uncertainty continues to grip the globe, some analysts are predicting that both the US and China may introduce fresh stimulus to drive their economies. And this can have a positive impact on commodities-focused economies like Australia. For more on what's in store on the commodities front, I'm joined by Jonathan Barratt from Commodity Broking Services. Jonathan Barratt, welcome to Business Today.
Good morning, Whitney.
So why would fresh stimulus in China and the US be so good for Australia's economy?
Look, I think at the end of the day, Whitney, the stimulus they really need to put in, it'll be very positive because Australia produces a lot of the primary inputs. You know, the iron ores, the coal, the gold, all those sorts of things, those economies need, particularly China. So any stimulus must be positive for us.
And what is it that makes you think new stimulus spending is likely to happen?
Well, when you look at it and you look at where the US is at the moment, the economy is actually starting to falter. It's starting to slow down. Jobless claims are starting to pick up. So when they've started, they can't really stop. They must keep this stimulus occurring for the economy. In China, they've got to keep that happening as well because they've got such a large population. So really the two powerhouses must keep going.
All right. Well, there are many critics to that point as well, that the US can't really keep spending because they're in such a huge debt. What do you say to that?
Look, I think it is such a huge debt, but when they've already started it, they can't really stop. I mean, it's easy to control a problem once you are getting some good solid return. At the moment, they've got problems, and I feel that they've got to continue to spend their way out of it.
All right, Jonathan Barratt, let's look at the commodity sectors broadly. If we actually focus for a moment on oil, example there is crude has fallen. Will it trade lower and why?
Yeah, Whitney, crude has been under increasing pressure across the board. Inventories are close to a 27-year high. So it is a little bit of a worry when you see inventories continuing to build. The labour market is a little bit of an unrest and the economy is slowing. We actually feel that it will remain soft, but we actually feel it's going to remain soft only to a good level from whence we would like to actually buy it. So soft, but overall we actually like it.
So soft, we're talking whereabout? Where's the floor? $70 a barrel?
Yeah, I think US 70 is probably about it. 70, 71. We're only about $2.50 off that at the moment, so I could actually trade that within the next 48 hours. But if it gets down to that level, we feel that it does represent good buying and on the back of what we feel stimulus packages will start to come in.
All right, another commodity we should look at is copper. We've got inventories at 9-month lows. Why is that?
Yeah, that is interesting because when you look at two primary inputs, you see that oil inventories are rising, and when you look at copper, inventories are falling. And I think what you'll find is that copper as the litmus test for economic recovery, we actually don't have as much as we actually thought we had in stock. So it is being consumed and used, and I actually feel that is the part of restocking of a lot of the stocks that we've had, particularly in China. And I think China is actually out there looking to restock a lot of its inventories.
All right, so if there is a solid rise set to take place in commodities, will it be sustainable and how long will it last before it generally consolidates?
Well, I think if we start to get that program starting to push through, I would probably think that it could last for some time. Remember, we are, I think, in the midst of quite a large bull market for commodities, particularly when I look at China in terms of its infrastructure and its population growth. So I feel they actually really need it. So I think it can last for some time. It's always the problem is actually picking that low, and I think we're getting very close to a low in a lot of the commodities.
All right, Jonathan Barratt, now we're nearly out of time, but just touching on the big issue in Australia at the moment, and that is the hung parliament. Yes. Many say that will mean the mining tax will be out, regardless of which party forms government. And also there are suggestions out there that perhaps there is a sovereign risk issue there. What are your thoughts on that?
Well, I think at the moment it is interesting too, Whitney, because the market's not really taking it as an issue. The Aussie had a good, relatively strong night last night and actually came back all the losses it made over the previous session. The equity markets only did a little bit too. So I think the international investor is really just on the sideline waiting to see who comes in, if in fact they then want to make a decision over sovereign risk, or they're saying, well, it's not too much of an issue. So I think at the moment we're not seeing too much clear light as to what's going to occur, but I think when we get an outcome, perhaps we might see some movement.
All right, Jonathan Barratt, we'll have to leave it there. Thanks for your time.
Okay, Whitney, cheers.